What can I glean from these TSMC results, and how's it going to tell us about the earnings for the rest of the tech space?
It's 10:30 p.m. in this AI party. It started 9 p.m. and that party goes to 4 a.m. And the reality is, like, look, this is going to be a 2 to 3 year left in this bull cycle for tech. Look, haters are going to hate. Bears will say it's a, this is a bubble. I could just tell you, this is a fourth industrial revolution. We are just in the early days of this playing out. I think those numbers and what we're going to see throughout tech earnings, it's going to be validation for the AI revolution. And I think the bears, look, when the bears are in hibernation mode, they can't see AI in the spreadsheets.
Are you looking specifically for anything in the guidance of the upcoming earnings?
Look, I think demand and supply for NVIDIA chips are 10 to 1. So just start there.
Okay.
Then you think about AMD, now that they're, obviously...
And all these deals.
They're going to be in all these deals. Intel gets brought in, TSMC. And then you kind of, if in a puzzle, look at the hyperscalers. I think right now Microsoft, Google, Amazon tracking anywhere from 5 to 7% above expectations. Look at Oracle, what they're seeing. Look, you put the pieces together here in the puzzle, especially names like Palantir and others.
Yeah.
It shows this is the next phase of the AI revolution. And that's why I think we're going to be talking about 25,000 NASDAQ, 27, 30,000 as this all plays out in this AI supercycle.
I have to be a hater, I guess, because of how bullish you are. I'm not really a hater, but I'm just going to play the hater.
Just to play the devil's advocate.
You mentioned about these deals, these circular deals. When you're talking about $1 trillion that OpenAI is willing to kind of pay for, I mean, we don't even know how they're going to get the money for it, but what does that tell you about, where we are? I mean, people say that is a bubble.
Sure. So look, and I get that. As someone like myself covered tech stock back in the 90s, right? So people make comparisons. See, I view it apples and oranges because here you're building out the next economy for enterprise, for consumers. And we're talking about like autonomous, robotics, like the future.
So it's not like vendor financing that we saw.
So, and I view it as like, if I'm Sam and OpenAI, if I'm going to give Lisa, Sue, and AMD $1, but I'm going to get back $15 to $20, that sounds like a good deal. And I think that's essentially how this is playing out. Look, I view it as more collaboration in terms of big tech in this build out. But that's where we are. I just don't, look, we're going to continue to have these moments where investors will be like, that's it. Oh, that's a sign of a bubble. I just think right now, Street's underestimating numbers, anywhere from 20 to 30% over the next year, underestimating the super cycle for AI, and I think underestimating the second, third, fourth derivative winners across tech.
Do we go a step further beyond simply vendor financing or collabs? Let's call it collabs. Do we get more mergers? Does it make sense to vertically integrate some parts of this?
Yeah, I mean, think about like, where are the chokeholds? Power. So you're going to see more and more acquisitions, whether it's on nuclear and fusion, I believe in big tech players.
Right.
You think about acquisitions on the use case side, because right now, Massive AI Palantir is really front and center, but you got names like MongoDB, Snowflake, and many other in software where, look, software back against the wall right now, right? And you saw that even like with Salesforce and others. So I think we're going to see more and more M&A, both from software and big tech players. Look, and what that means, that's bullishness, in terms of where I think these tech stocks, go going forward, just given the trends, a deregulatory environment, a Fed that's cutting. I get the U.S.-China tensions, and that's something that obviously everyone's navigating. But I think you continue to this is a game of high-stakes poker. And I think if you've been able to navigate it, that's how you've been able to make a lot of money since April.
But if China is trying to enforce at least this whole, these export curbs around rare earths, for example, doesn't that have some sort of impact on global supply
I view it
chains?
as it's all negotiation, right? Okay. This is all a game of poker, and they're on the same side with U.S. and NVIDIA. But at the end of the day, China, there's a super cycle going on. U.S. super cycle. So I don't view it negatively, maybe like some others, because I view it competition. Guess what? That's bullish. I mean, our Ives AI 30, we have Alibaba and Baidu, because I think that's bullish for China. Just like what's happened in the U.S. So I view this much more of a global super cycle as actually being led by U.S. and China rather than some sort of, battle, and that's going to be negative for the names.
What about just short-term investment strategy, right? So Palantir, good company, arguably very bad stock. It's trading at, I don't know, but it's some crazy multiple. How do you approach something like that? Who's bullish, but you look at a company, it should not be trading at that multiple.
It's like a Palantir, right? They hated it at 12, despise it at 50, yelling from the mountaintops at 100.
Okay.
So the point is, like, they've missed, obviously this 15-bagger. I believe Palantir is a $1 trillion company in the next 2 or 3 years. Because my view is that if you just focus on 1 year PE valuation, you missed every transformational growth stock. You missed every transformational growth stock the last 20 years. So you have to be able to look out. But look, I get it in terms of in the spreadsheets, they can't see these things. But if for someone like myself, travels the globe, a name like Palantir, I view that as really one of the leaders of this AI revolution.
How you've been traveling around the region. Obviously, we've been talking a lot about the China tech and AI sort of race and the like. How do you see the parallels or the differences between the U.S.?
Yeah. I think here, look, if I just compare over the years, right, a lot of skepticism, maybe 4 years ago, 3 years ago, and now, no matter where you go in the regions, who are the winners, whether it's on memory, infrastructure, energy. Because the reality is it's a deregulatory environment, and you can't fight the trend. Trillions being spent, okay, you could argue valuation on some of these names, and that's all in the eye of the beholder, but it's like, okay, what are the second, third, fourth derivative beneficiaries? And I think it's very positive in terms of just overall sentiment. Look, you're going to have some white knuckle moments. You guys always talk, and I get that. But that's all part of this journey where I believe tech stocks go higher, both in U.S. as well as in China.
When you look across the AI ecosystem that they're creating in China, for example, everything from the foundries all the way to the designers, all the way to the end users, where do you suspect the gaps are going to be? In other words, where do you see the opportunities as you draw the parallels with what we're seeing outside of China?
Look, China is clearly ahead on power. Right, and that's going to be a chokehold in the U.S., and that's why nuclear, and that it definitely...
Is it nuclear, by the way?
I believe it's going to be, for U.S., I think it's nuclear. I think nuclear, that's why ACO is the name that we've been super bullish on. Look, when you look in China, like robotics, like massive innovation that's happening. You look at ultimately what's going to happen with Huawei. I believe Alibaba, to me, is just a massively dislocated name. That's why we're super bullish on it. Baidu is another one. And I think what you're now seeing is just this massive innovation wave coming to China. It's not just about big tech in China. It's about whether it's on mobile, whether it's on auto. So this is going to be a time right now where I think globally investors want to risk on when it comes to the China market. I get this U.S.-China battle, and we've been navigating it, but you cannot let it deter you from a fourth industrial revolution that we're living in. Because it comes down to, if you watch the party from the outside through the windows, at 6 a.m., the Bulls and the Bears meet up at the diner. Bulls had a lot better night than the Bears. So the point is that speaks to my view in terms of where we are.
You don't want to get in front of that train. When you talk about the likes of Alibaba, the likes of Baidu, is it better in terms of in China to focus on these big beta names, or do you look at things like a Campercon now as a U.S. investor?
I think for me right now, it's about China big tech. I still think it's way oversold. I mean, obviously you've had some rebound, but investors are not appreciating what this can do for Alibaba, for Baidu, for JD, in terms of where I see it.
Sure.
And I think also, like, these are companies that are transforming. Maybe an auto company today might be a mobility company, over the next year or two. So to me, it's big tech in China that continues to be the core play from a U.S. perspective. And then ultimately you look at the derivatives as this plays out on the memory side and others.
You're here in the Asia Pacific several times a year. Do you notice a big difference between your trips? What's the sort of the delta on what you observe on the ground?
I'd say Delta, let's say a few months ago, was a little more like a lot of nervousness.
Okay.
Now it's like, who do I invest in? What am I missing? Where do I go? So I think it's much more of that attitude across the world that I see, because, look, I think investors are realizing, like, you can't fight these numbers. When you have big tech spending $350 billion and probably going to spend $450 billion CapEx next year, sovereigns around the world now starting to get in, Middle East, obviously UK and others, the biggest beneficiaries there, it's U.S. tech, it's China tech. How do you capitalize on that?